there, welcome to the closing bell video on the 4th of September. This week we had a bit of movement in the markets with the Jackson Hole speech from Chairman Powell from the US Fed. Really a nothing burger, nothing coming out as far as the tapering goes. So really it's just continue on as normal. The US markets can continue marching higher, but the big move and the surprising move, I guess, was the US dollar reversing after a good rally since May. I've been calling it higher, but it's just starting to look a little dangerous. But that is really kicking commodities into high gear. So we are seeing some pretty good moves after they've been treading water for a while. So I'll show you a few of those charts to have a look at and a couple of the stocks that are really starting to move as well. So let's get onto the charts. So this is a chart of the US dollar index. It is a weekly chart going back to 2015. You can see there. And really the main thing, I've shown you this chart a few times. The main point being that it's been stuck in a range for the past 6 years. And when that happens, the midpoint of that range can just be a bit of a gravitational point that the market keeps rotating around until it's ready to move out of the range. So we've had this range. You can see lots of false breaks of those range, and that's what I make calculations of, looking for areas where the market reverses course and heads back to that midpoint, which we've spoken about before. And you can see that in the past, we've had this huge range that happened back in 2017, 2018. And after that range occurred, there's been a couple of instances where prices got up into that sell zone, which for me, the sell and buy zone, you know, the 75 to 87.5% retracement and the 12.5 to 25% retracement. So just for new people, just so you know, there's just those areas within waves and also within ranges where prices have a higher probability of changing course and heading back to the midpoint of the range. So that can just help with trade opportunity development. So you can see back in 2020, we had the spike right up into that sell zone. Prices turned down, headed back to that midpoint. And then in the last few months, I've just been watching this price action with that US dollar finding support in that buy zone. And even though it's in pretty strong downtrend, which I'll show you in a second, it's found that support for months. And I was wondering whether it was going to have enough power to head back to that point of control. That's sort of been my target for the moment. But with that Jackson Hole speech and the way prices have moved, it's just making it look a little sketchy. So I just want to show you why I think this US dollar could turn down from here. So why I'm backing off my bullish call and just want to go back to neutral and see what happens here. So what I want to show you is initially the downtrend that we've got. So when I'm analyzing these trends, if we're just looking at the actual price action on this weekly chart, you can see it's been a very strong initial wave down, but you can see there's a reaction and then the next wave. And the major point on this is we really need to see prices back above the lowest high in that downtrend to say that that downtrend really is under threat, that it's possibly going to start trending back up again. So from that point of view, it still is trending down. And how I analyze these waves, I can use the same thing that I've been showing you here. I can look at that wave up close, and let's get it nice and close for you. You can see quite clearly when you're just looking at this particular wave, and I point out for you again, the sell zone and the buy zone of that wave. And let's have a look at what happened with the price action since. Well, look at all those reversals right in the sell zone, back to the point of control, came down into the buy zone there, reversed again, back to the point of control. And you can see that prices again have gone up into that sell zone. And this was the Jackson Hole speech. And it's been rejected from that sell zone again and turning down, creating a weekly sell pivot, heading back towards that point of control. And, you know, potentially could rotate all the way back to the bottom of the range. So just the way it's looking from that point of view is that the bullish case on the weekly chart has turned in that US dollar. And if we also look at the monthly, you can see with this monthly chart where we've got the 10-period exponential, that red line, and then we've got the 20-period simple, the blue line. That's just a way of looking at the long-term trends. And basically the long-term trend is still down in that US dollar, despite the fact it's been trying to rally for the last few months. And the selling pressure should be around that 20-month simple moving average. And you can see it did actually get rejected from there last month. And we're turning down, potentially heading down below that 10-month exponential. And that can be quite bearish. If we get a monthly close below that 10-period exponential and also create a monthly sell pivot, all of a sudden that looks like it's game on to the downside again for that US dollar. And we should remember that the 5-year low down here around 88 in that US dollar, that is pretty scary if you end up seeing the US dollar heading below that sort of level. Now we're a long way from that, but it's just something to keep in mind that US dollar big picture is actually still bearish, despite the fact I've been saying it's probably going to rally lately. So yeah, that's a big issue with the US dollar turning bearish. It really does affect so many markets, and you've got to be on top of these things. So it's really enabling the commodities to really kick back to the upside. They've been in a strong trend for a year, but they've been treading water for the last 5-6 months. A few of them in a bit of a correction, but it looks like the buying really has returned to a few of them. So I just want to quickly show you a few things that are looking pretty good. And again, this is the monthly. I'm going to whip through these quite quickly. On the monthly, the trend is up in that oil price. You can see this was the most recent wave down. So that's where the selling pressure should be, in that sell zone. There has been a bit of pressure for the last couple of months, but it's just bounced back to the upside in the last week or two after the Jackson Hole speech. So last month closing nice and strong, and this monthly uptrend still well and truly intact, holding above that 10-month exponential. So really the next stop we want to see is prices heading above 78 bucks, and all of a sudden you're getting targets much higher. So that oil price, looking good for now. Just quickly, this was mentioned in the article above, the Japan, Korea marker, Platts futures. That's the futures on the LNG gas prices. And that has gone ballistic, as you can see. That was down at $5-6 at the start of this year. And that has gone vertical and is still going vertical and is headed above $20 where it is now. And I think European gas prices also going through the roof. So that is definitely an issue to keep an eye on. Rare earths also looking really strong, holding up near their highs, and after sort of treading water for a few weeks, but there's still, the monthly trend is up, holding above the 10-month exponential, looking strong, and you can see the potential recovery going on when you look at what happened from 2013 to 2016. This new bull market, may have a lot more to run to the upside, and you're definitely seeing strong buying. I'll show you Arafura in a second. Lithium prices as well, look at that, really powering, again, hugging that 10-period exponential monthly moving average. Really strong trend, no signs of that turning down yet. And just wanted to focus your attention on nickel. We've got a trend that's been going on to the upside for the last few years. And, I've been watching this and giving you hints about where it was going to turn. I said it was bullish down here when it was basically rallying from the buy zone of the most recent wave. But here we are testing the top of the range, really up the top there, and it's been rejected for the last couple of months. It's been sort of struggling to carry on with it, and has really been, in a consolidation phase since the start of the year. But it's consolidating right up near the highs, and I'm just wondering what's going to happen if it does bust out above that sort of $19 level. It's looking like we could be in for a pretty serious wave to the upside in nickel, but we'll see. We'll see. But it really is looking pretty positive right now. And uranium, I did show you a chart above in the article I wrote showing you this uranium ETF. Again, since Fukushima, it's been an absolute washout in uranium, and that has really turned back up just in the last year. And a lot of mothballed mines coming back online, Paladin looking to get running again. And if you look at it close up, you can see that the trend is developing really nicely. And you can, once you've seen that long-term chart and seen just how far it's fallen, you get that sense that this really is just the beginning of things turning back up, with uranium prices kicking to a 5-year high, I think a couple of days ago in the futures markets there, up to around 37.20. If the oversupply situation is really changing, if that whole dynamic in the industry is shifting, it really could be quite a good rally that we do see. And I do still see nuclear as an important part of the energy mix going forward. And there's certainly a lot of construction going on around the world in that space. Now let's move on to a few stocks, just have a look at what's going on out there as a result of these moves in the US dollar and the commodities starting to pick up. We have in the rare earth space, Arafura Resources, really looking pretty interesting to me. It's had to raise some money, I think recently, around 13 cents, and it looks like that has washed through the system and has been taken care of, and it's starting to turn back up. And you can see it's been a really nice run from around 6 cents up to 30, and we're getting a bit of a correction which has occurred. And just notice again, using the monthly charts, we've got the 20-month simple there, the 10-month exponential. So we've got a long-term uptrend has taken place. And what I like as far as opportunities is when prices do correct, the first correction after the long-term trend shifts back towards those long-term moving averages. And once that does happen, I think that can create a pretty good opportunity. And we've got the monthly buy pivot came in there last month, and it is starting to kick higher here. So Arafura is looking pretty interesting for more upside, I'd say, in the next few months. Nova Minerals is another one that is looking interesting, trying to turn back up. This one is a gold, explorer, probably going to turn into a mine. They've got a very different type of deposit, which is disseminated, quite low grade, but bulk tonnage, heap leach operation. It can be really profitable. They did take off a while back, heading from 4 cents to above 20 cents. We've just been in a bit of a corrective phase, and they've just come out with some more drill results as they do infill drilling to shore up the resource they have. And it looks like the market has liked that today, although they've, on Friday, although they've ended up closing around 13 cents. But they are probably a gold stock to watch. If we just look at the development of that trend, the long-term trend shifting there. And again, remember I told you the retest of those long-term moving averages, the first time it happens, is often a pretty good spot to be looking for opportunities. But here we are at a next retest. And if we get the monthly buy pivot, potentially that could be ready to take off to the upside again. So Nova, not quite ready, but is looking pretty interesting. And just to show you what is happening in this uranium space, the moves that we're seeing, just a huge move in Paladin on the week. You can see it's gone from 50 cents to a high of around 80 cents. That is a 1-week move there, which is pretty incredible. Now I got my people in, Pivot Trader in around 12 cents last year. They've been in for about a year. So, a move from 12 cents to 80 cents in a year, that is the sort of thing you're seeing in the commodity space. There's some pretty interesting things going on. And as I said, it's probably pretty early days, but these stocks may be getting ahead of themselves a bit here now that it's really taking off. So you'd want to wait for prices to correct back to the moving averages. The 10-month exponential would be one, but I wouldn't be chasing it too hard. But yes, there is definitely some interesting stuff going on out there in that uranium space. And I guess you could do your own searching for some of the other companies, Deep Yellow, that is having a nice move as well. A few things going on out there in market land. The US market's still rallying to the upside with the Fed now saying, look, hands off for the moment. We don't know how long that'll last. Maybe it'll only be a few months. But you have to go with the flow when things are moving like this. And there's certainly a few interesting things to have a stab at out there if you're focused on things. So if you want to check out my service, what I do, check out the links below the video there. Otherwise, check in next week when I'll come back with another version of Closing Bell. All right, cheers.